Good morning, and thank you for attending today's webinar with Bruce Whitfield. This is also our last webinar for the year. I'm sure most of you are looking forward to the festive season. Those of you who will be traveling, please travel safely, and we hope you'll have an awesome time with family and friends. I'm sure most of you have listened to podcasts of Bruce before, where he's hosting the Money Show. Bruce usually covers a wide range of topics where you have discussions with company CEOs, industry experts, as well as politicians. Bruce has an in-depth understanding of the South African market, and Bruce, all of us are really looking forward to listening to your message. Following Bruce, Gustav Schulenberg, a portfolio manager at PSG Asset Management, will provide us with a brief summary of how we see the SA landscape and where we're finding the best opportunities. At the end, if we do have sufficient time available, we will conclude with a questions and answer session. But without further ado, I'd now like to hand over to Bruce.
Charles, thank you very much indeed. I was tempted to leave my webcam off and my microphone off just for 10 seconds. Just to mess with you, but we don't do that. Good morning, everybody. Thank you so much for taking time out of your day to spend time with us this morning. I would like to introduce you to the upside of down. It is a talk which is based on a book by the same title, and that book, of course, The Upside of Down, and I published it earlier on this year. And Bronwyn, if you could tell me that we are seeing the screen perfectly, I will continue. Today's talk is about optimism. And part of the talk is about optimism, and you would think that that's kind of a weird discussion point to start off on, because who on earth can be optimistic in a world that has turned out like the world has turned out in 2020. I mean, we've seen market turmoil, we've seen your clients, no doubt, absolutely petrified about the future. We've seen desperate health concerns. By now, you at least know somebody or some people who have tested COVID positive. Many of us know people who have died of COVID, and it is a very real and tangible and awful thing to have to live with. But I want to talk about optimism from a different perspective, not from a Pollyanna perspective, not from a perspective that says everything is absolutely fine, everything is peachy, kumbaya, because it's not. But do you believe fundamentally that the future is better than the past? And I guess that is the ultimate test of optimism. When we look at hopefulness and confidence about the future or the success of something, does the pandemic in the short term return? It certainly looks like it. If you're in the Eastern Cape or you're in the Western Cape or the Southern Cape right now, you are a little bit more apprehensive about going out to the shops or going to a restaurant than you were a month ago when things were looking very easy and peachy. We got a bit complacent. People started wearing their masks like they're bank robbers rather than people who are concerned about their health. So if you believe that the future is better than the past, that's fine, and that's a good thing, because in my experience and in 20 years of financial journalism, I've interviewed many, many billionaires, people who 30, 40 years ago were starting out in their businesses and have built enormously successful, in many cases, globally competitive businesses. They've got a couple of characteristics, okay, in common. One is extraordinary resilience, amazing flexibility, because they're able to duck and dive and to traverse the huge complexity, not only of the world, but the South African environment in which we live and trade. But they're also optimists. By nature, they're optimists, even the grumpy ones. Even Brian Joffe, in his very basest instinct, for those of you who know Brian, lovely guy, but can be quite grumpy, even he's an optimist. Starting businesses in South Africa, you have to be an optimist. You have to see a future that is better than the past. And so far, that strategy has paid off incredibly well for people in their everyday lives. I never thought I'd be quoting Vladimir Lenin in a presentation, but here I go. There are decades where nothing happens, and there are weeks where decades happen. My goodness me, and 2020 has been that year. I was lucky enough to be in Davos in January this year, where we were beginning to hear the rumblings of this new virus. People were beginning to use the terms of epidemic. Nobody yet said pandemic. That's a big and scary word. That word was used in February when it became very clear that this little guy was going to go around the world and wreak absolute havoc. By the middle of March, economies were already in rapid slowdown, and then we started to see the lockdowns happening across the globe by the middle, late March, including in South Africa, the 26th of March. And catastrophe followed. When you arrived back to the office after your lovely December holidays, it may have looked a bit like this office, and very quickly it transformed itself into a wasteland like this. And certainly some of the offices in which I work from time to time, just this morning have declared a force majeure, saying we need to go back to this, simply because of the surge in cases that we're seeing. And that flexibility is really important in terms of managing the outlook. But if I was to summarize 2020 for you, so January, I was in Davos. February was budget time, and Tito Mboweni was pretty confident that he could get civil servants to cut back on their wage expectations. We needed to trim our costs. It was going to be a little bit tough. And then we had January, February, quarantine, and suddenly it's December. Geez, what a year it's been. It's been absolutely horrendous. That middle bit, or the 3/4 of the year, effectively written off. As Mike Tyson just recently back in the ring at age 54, we drew against the other guy. Everybody's got a plan until you get punched in the mouth. And we were all given a proper punch in the mouth in 2020. It has been a most extraordinary year of agility, flexibility, of ingenuity. I spent some time with Annette Hearn last week, and she was telling me that in the days before lockdown, they were trying to get everybody who works in PSG Asset Management onto, get everybody onto Wi-Fi and onto 4G, because not everybody was equipped to work from home. But they went to cell phone shops and everybody had sold out of SIM cards. But there was a special in Cosmo magazine. Cosmo magazine's never had it so good, because Rain, the cell phone provider, or the data provider, which Michael Ludan and Paul Harrison got a big stake, they were giving away SIM cards free as a Rain deal. And so Annette said people to go and buy up all the Cosmos they could, and everybody got hold of a free SIM card so that they could be connected to the internet. And we just saw offices empty, and everybody who could work go and work from home. It's had a devastating impact, though, on profitability. Redefine's results yesterday, Nampak's results yesterday, so many other company results negatively impacted by coronavirus. I mean, it's hard enough getting decent sets of results even in good years, but when you add to EBITDA the big C, which is Corona, the impact has been absolutely enormous. We've seen some companies actually coming out of this quite well. The food retailers have held up quite well, but generally we've seen companies take a lot of strain. If it wasn't for Naspers and the 10-cent effect on our market, we'd be a lot worse off. And boy, talk about being punched in the mouth. This guy didn't intend for 2020 to end the way it's ending. If there's ever somebody who lives in denial, it's dear Donald Trump, who still has not conceded to Joe Biden after being trounced in the American election a month ago. He's going around fighting state by state by state and getting his butt kicked absolutely everywhere, and being told, Donald Trump, you are the weakest link, goodbye, or whatever it is, you're fired. That was his line when he was on The Apprentice, of course, was Donald Trump. But yeah, so Donald Trump, when he was in Davos in January, was unstoppable. Donald Trump was the guy who was going to win the 2020 election. He was going to be re-elected. Like so many before him, he was going to be re-elected. He becomes one of only 10 US presidents in history to not win re-election. And that is a massive vote of no confidence. Look, he did win more than 70 million votes. And Biden, however, got more than 80 million in the popular vote and took the Electoral College very, very convincingly. And we're ending an era now, a short-lived, thank goodness, era of disinformation, misinformation, disrespect, a really nasty era in politics. I'm sorry if you like Donald Trump, but the guy isn't going to be around anymore. And it goes to this quote that's often attributed to Mark Twain, and I don't know if he said it because the internet is full of lies, but I like the quote anyway, whoever said it: politicians and diapers should be changed often and for the same reason. And I think we can relate to that absolutely perfectly. With us for me, his name is Joe Biden. He's 78 years old. He'll be the next president of the United States. Takes over on the 20th of January next year. Already what Joe Biden is doing is changing the tone of the messaging around COVID in the United States, encouraging people to wear masks. I have no doubt that he will become far more regulatory and legislative with dealing with COVID, because the United States has seen a dramatic outbreak of COVID-19 and has seen the dreadful consequences of its spread across the United States. He's also agreed to take the United States back to the Paris Climate Agreement, which is the next crisis, or possibly the next crisis, with which the world is going to have to deal. But I mean, in January, it seemed impossible that anybody the Democrats put up, particularly somebody who's nearly 80, could possibly beat Donald Trump. And it's amazing how fast things can change, and change they did. For 2020, I mean, so far we've got about 64 million cases around the world of COVID-19. Nearly 1.5 million people have died. And it's very, very easy to believe that we are living in the hardest times in humanity. At the very depth of this crisis, there were some forecasts that suggested that the economy would shrink by as much as 12%. That was revised to certainly double digits. Definitely the South African economy is going to decline by 10%. We started seeing the gradual reopening of the economy. Then just today, the latest figures suggest a contraction in 2020. It's a disaster, by the way. Let's not soft soap this at all, of 7.5%. So the economy is 7.5% smaller than it was in 2019, which is 3 times worse than it was in 2008. So it's bad. Let's not pretend anything else other than this is an appalling outcome for the South African economy. However, it is considerably less bad than we feared at our darkest time. And in South Africa, South Africans, we do tend to assume the worst. I would dare to say that we mustn't be that quick in making negative assumptions, because we do make negative assumptions based on the social media profiles that we follow, the people that we're friends with, the people we have brides with, the people who give us a call from time to time to chew the fat and talk about the world and tell us their problems. We're keen to talk about the world and how difficult it is. And so often we don't look at the world holistically. We don't look at the world from a problem-solving perspective. Quick little story about World War II. 1944, the US Navy, which had lots of aircraft carriers and lots of aeroplanes and was operating in the South Pacific, it was operating in Europe, and lots of their aircraft were being shot down in combat. It was a terrible, terrible conflict, as you will have read in the history books, of course. They looked at the aircraft that were making it back to base, and they basically mapped the bullet holes in the aircraft. So they took a look at them and said, look, our aircraft are limping home. They're making it by the skin of their teeth. We need to make them stronger. We need to armor them better. We need to give the pilots a better chance of getting back alive. So clearly the tips of the wings are vulnerable because they keep getting hit on the tips of the wings. The fuselage, boy oh boy, just where the wings meet the fuselage and behind the cockpit, that's clearly an incredibly vulnerable spot. So we need to armor that. We need to make that much stronger, because look at all the bullet holes there. And the tail of the aircraft getting shot up as well. We need to make the tail stronger. And these statisticians in New York, all these maths nerds from all over the United States, and there were some foreigners there too, were dealing with this problem and saying, but if we add armor to the aircraft, it becomes less flexible in the air, it can't move as quickly, it becomes actually more vulnerable. And they were really stuck. Until a guy called Abraham Walt, who was a Hungarian Jew, who was a very, very good mathematician, went, guys, what are we not looking at? We're not looking at the aircraft that were shot down. We're not looking at the aircraft that didn't make it back. What we're seeing is the aircraft that did make it back. In fact, aircraft with these bullet holes are actually very resilient. Aircraft that are shot in this way do make it back. The ones that don't make it back are getting the tails shot off. The pilot's cockpit has been shot up. The engines are being shot up. We're looking in the wrong place. We're looking at what is directly in front of us, and rather than looking at the problem holistically. And so often in South Africa, when it comes to making decisions, we make decisions on the loudest noise, the brashest expectations. I mean, how many of your clients came to you in March and April of this year saying, please put me in cash. Take all of my money offshore. I don't care what you do. Just get me out of South Africa Inc. Whatever you do, get me out. Well, certainly all the numbers I see from asset management companies saw a massive surge in the demand for offshore investing. And for people, it gave them a sense of comfort that they were acting and they were doing something proactive, but they were doing it at precisely the wrong time. There's no argument against global diversification and internationalizing portfolios. South Africa is 0.5% of the global economy, for goodness sake. You've got to be nuts to not want to have your finger in many, many pies. So by putting all of your assets in one basket, that is fine. But when you panic at the wrong moment, you make bad decisions based on incomplete data. Incomplete decisions. I mean, we all make incomplete decisions all the time. For Cyril Ramaphosa, sitting in March with his Security Council, whatever they're called, Command Council, and he's sitting there and he's saying, guys, what do we do? There's a pandemic. And half the people around the table say to Cyril Ramaphosa, and I'm fairly well informed on this, we don't do anything. It's a European problem. It's a Northern Hemisphere problem. It's a developed market problem. We're in Africa. I mean, we survived cholera, the AIDS pandemic. This is not something that's going to affect us. But it was actually Cyril Ramaphosa lobbied by business who forced the lockdown. And I think business anticipated that we'd go into lockdown quickly. We'd do 3 weeks of lockdown and we'd emerge fairly quickly from it. But it didn't work out that way, as you know, and we had another 2 weeks of hard lockdown, and then a host of petty regulation and Ibrahim Patel telling internet service to internet shoppers that they couldn't buy stuff online. The Takeoff couldn't operate because it was unfair to Spaza shop retailers, and just because they had more money and they were online. I mean, it was a shambles. It really was. Finally, government acquiesced because they realized the destruction to the South African economy. But decision making at the best of times is really, really hard. And again, I have some empathy for Cyril Ramaphosa, who today is sitting making decisions for the Eastern, Southern and Western Cape as to how we manage this latest surge in COVID-19 outbreaks. It's been a good year for somebody like Shamila Batoy, who seemingly was absent from the office for much of last year. She only arrived at the office in February last year, and this year, in lockdown mode, she's really managed to get her teeth into some of the country's more contentious cases. We've seen huge work being done by the National Prosecuting Authority finally. But imagine, she arrived to a really deeply dysfunctional place that had been hollowed out and deliberately weakened in order to prevent the prosecution of the great heisters, the people who tried to steal the economy over the lost decade of the Zuma years. With Shamila Batoy, she's finally struck, and thank goodness she has. And we're seeing some fairly high-profile cases happening. What was it that Vladimir Lenin said? There are decades where nothing happens, and weeks where decades happen. I mean, who would have thought a month ago that Ace Magashule would be facing ouster from his position as Secretary General of the ANC? The stories this morning suggest the ANC, or certainly the Ramaphosa faction within the ANC, has got very strong legal opinion that Ace Magashule needs to step aside until either he is convicted, and then he's gone anyway, or until he can prove his innocence. But there's a huge amount of evidence against Ace Magashule in the scandal around asbestos roofing in the Free State when he was Premier, and money that went into Lamborghinis and Porsches and expensive houses in Bryanston instead of going where it was supposed to, and that was to go and help the poor. The Estina Dairy Project issue is still to be properly revealed, and there are countless other allegations against Ace Magashule as to his premiership in the Free State. 12 months ago, it seemed impossible that he would ever even appear in court, never mind be charged with a crime, never mind be told that by February he needs to go and defend himself on the charges that are going to be proffered against him. Who would have thought that the former head of crime intelligence, Richard Mdluli, would be in jail? I mean, all of these cases are significant. DBS Mutual Bank, what a shambles that was. The most blatant bank heist in history, assisted by large corporations, assisted by certified auditors, by people with CASA after their name, and a deliberate fraud carried out, stealing money from municipalities, bribing municipal officials to illegally deposit money into a mutual bank, because in terms of the Public Finance Management Act, you're not allowed to put money into a mutual bank because the regulation is lighter than it is in a full service bank. So, I mean, this was a deeply manipulative thing. And the FD of VBS has said, yep, I'll turn state's witness. Thank you very much. Ace Magashule's former personal assistant, who's studying in the United States at the moment, has also put her hand up and said, I'd like to cop a plea bargain as well. Just let me off lightly, and I'm very willing to hand over the big fish. It's a massive, big and positive development. Somebody like Edward Kieswetter, who's trying to turn around SARS, I mean, he's also been doing it with one hand tied behind his back. Tom Moyane, of course, was in the Zondo Commission this week by his attorney, Dali Mpofu, badgering Pravin Gordon, who didn't cover himself in glory either, by the way, this week. And it was quite a petty tit-for-tat spat between two adult men of different political persuasions, and Dali Mpofu doing his very best to discredit Pravin Gordon. And again, I see, depending on who you like to believe, Gordon won it, Dalia Borford won it, but ultimately it's up to the Zondo Commission to decide just how much of what came out in the SARS Commission, the Nugent Commission into SARS, how much of that was deliberate and how much of it was designed and orchestrated to weaken SARS so that SARS couldn't do its job properly. I mean, this is the stuff of treason that was happening in South Africa, certainly during the second Zuma administration. For some people within the state system, they've held their resolve incredibly well. For Lesotho Kganyago, the Reserve Bank governor, a guy of remarkable steel, resistance, resilience, and almost, it was certainly publicly unflappable in the face of enormous pressure when it came to quantitative easing and the nationalizing of the Reserve Bank and the money printing Venezuela, Zimbabwe scenario that some within the ANC would have liked the Reserve Bank to pursue. But Lesotho Kganyago, in now in his second term as Reserve Bank governor, simply putting his foot down and saying absolutely not. And also in the darkest days of this crisis, finally cutting interest rates down to a point where actually there is a chance for the economy to recover. And already we're seeing it's not coming through, certainly in second-hand car sales, we're seeing some life. It's not really in new car sales yet. And in property sales, there's a very good indicator that there's quite a lot of demand in that segment up to 3 million rand. So cutting interest rates is beginning to provide a little bit of stimulus. Whether it's going to be enough, I don't know. But Lesotho Kganyago holding his resolve, but also making the Reserve Bank the buyer of last resort when it comes to the bond market. And that certainly stabilized things and calmed markets down in the darkest days of the crisis. So he gets a gold star. Somebody else who's made a huge impact, and he only arrived at the office in January this year, Andre de Ruyter. Certainly not the first choice of government to go and head up Eskom, but he was the first guy to agree to go and do it, and so they gave him the job. And he had a good opportunity during lockdown to put extra bubble gum and sticky tape on the ancient South African generation network that we have. But no sooner do we come out of lockdowns than we started seeing power cuts again. What does Andre de Ruyter do there? He does something the last 10 CEOs at Eskom have not done, and then he goes and does site inspections. He gets out of the ivory tower of Megawatt Park and actually goes to problematic power stations to go and inspect them himself. He worked at Sasol. He worked in the coal division of Sasol. He understands coal very, very well. He's a lawyer by training, so he's got a very analytical mind. And he identifies 3 power stations in particular as problematic, and he says to all of the power station managers, improve the following things, otherwise there's going to be trouble. 3 of them defy him and they get booted from their jobs. And you know what? I know that it coincided with the move from winter into spring into summer, but we haven't had load shedding since Andre de Ruyter went boss, I suppose, got very, very cross. And so to his credit, Andre de Ruyter seems to be doing a very nice job at Eskom. I mean, we know the 3 stages of rage in South Africa. When we have load, I mean, when there's electricity, it's fine. Everything seems cool. We get load shed and then we use lots of bad words. And that is not polite, especially in the company of the elderly or children. And then we just get fed up. And I think by the end of 2020, we're all pretty low chat. I think we're so tired of the year that we have been. But remember this time last year? We were feeling so optimistic about 2020 and just how much worse it has been than we could ever have imagined. So we get that as we come to the end of this year, that we're just all beginning to feel very, very, very tired of the year. Lots of homeschooling, lots of disruption, lots of really tough work from home environments in an economy that is massively constrained. Your clients are all struggling, your practices may be struggling, and so it's tough. Really is tough. But and again, it's purely coincidental, and I don't quote Pete McDonald here simply because he is the chief executive of PSG Group, and this is a PSG webinar. I quote him, to anybody who will listen, because he summarizes a philosophy held by Yanni Muto. And Yanni was always of the view that you could be negative. If you have a negative outlook, you're never going to create anything new. You're never going to develop anything or build anything. If you read into it, fire or the translated version, and then they fired me, Yanni talks about this in that book. And Pete summarized it at a conference at Sun City last year, I think it was. It feels like a million years ago. He just goes, negative people never build. It's short, it's succinct, and it's true. And Steve Jobs, I mean, we didn't need cell phones. We had cell phones. Cell phones made phone calls, and cell phones were great. Cell phones were very useful tools for us to go about, and they were miraculous. We didn't need a smartphone. And even in the first couple of years, I mean, first 5 years of having a smartphone, how many apps did you have? You treated it like a phone. Apps had to catch up with the technology. For Elon Musk, I mean, this guy's sending second-hand, third-hand, fourth-hand rockets up into space, for goodness sake. I mean, this is the ultimate cheapskate, is Elon Musk. And he's got Tesla, and Tesla's, the rocketing value of Tesla this year, and I don't think it's sustainable for a second, but Tesla's pushed him, elevated him to the second richest person in the world in a year. It's insane. Hope he enjoys the position while he holds it, but certainly there is no greater optimist, I don't think, than Elon Musk. But not everyone's a fan of Elon Musk's brand of optimism. Chief executive of Panasonic, Kazuhiro Tsuga, says Elon Musk is a genius who's common sense and can be overly optimistic. Elon Musk can be overly optimistic. And I ask you this question with all seriousness. Some of you may have some Panasonic products in your house. But if Panasonic was to make a battery-powered car, and Tesla has a battery-powered car, or was to make a battery for the war, or whatever the case might be as a backup power supply, would you want the Tesla product or would you want the Panasonic product? I think from a brand perspective, Elon Musk's optimism has elevated him. What does Elon Musk think about it? Well, he says, I'd rather be optimistic and wrong than pessimistic and right. Because being a pessimist is energy sapping, it is draining, and it's easy, frankly, to be a pessimist because there's a hell of a lot wrong, not only with South Africa, but with the world at the moment. But for those who are able to look through the noise and the clutter and the argy-bargy and the fighting and the shouting, there's a huge amount of opportunity, an enormous amount of opportunity. How do you define that opportunity? Well, you need to arm yourself with facts. And here's a fact. Let me give you a fact, for example, something I found on the internet. This guy, his name is Arnie Nace Jr. Now, Arnie, very gifted guy. Silver spoon in his mouth, born to billionaires, became a billionaire himself. But he became famous in 1985 for two reasons. The first reason was he was the first Norwegian ever to successfully lead a team of Norwegians to the top of Everest. Tick, well done, Arnie Nace Jr. In November that year, he married this woman. You may recognize her as Diana Ross, the former lead singer of the Supremes. And in 1970, when she left the Supremes, what was Diana Ross's #1 hit single, the first #1 single after leaving the Supremes? What was it? Ain't No Mountain High Enough. Now, how does she, in 1970, sing a song of Ain't No Mountain High Enough, and then in 1985, she marries the guy who conquers that? It's crazy. But now, that is what happens when you live in the social media world. You find tons of facts. 99% of them are completely irrelevant. However, there's a growing body of research and study that suggests that what we consume online affects our mindsets, it affects the way we see the world, and so powerful is it that it can have huge economic outcomes. Robert Shiller, Nobel Prize-winning economist, wrote this book last year, all about the phenomenon of social media and how those stories go viral and how they drive major economic events. Certainly in South Africa, we've seen it at the hands of Bell Pottinger and others. I mean, remember, Bell Pottinger, this London-based consultancy doing work for the Guptas, creates stories and narratives and pays people to sit on social media feeds and to deliberately spread plausible but inaccurate information. And to create this drive and this humdrum, and it drove South Africa into this negative cycle like I've never seen before. It was the most terrifying, orchestrated diminishing of South Africa in not only the global view of South Africa, but its own view as well. I want to do a poll quickly. Can we do a poll? Bronwyn, can we do a poll? Let's do a poll. I want to ask you a question. And you get to respond, by the way. Very easy. The instructions are all on your screen. I would like to know from you, please, how many recessions has South Africa had in the last 50 years? Yeah, 50 years. Has it had 9 recessions, 14 recessions, or 18 recessions in the last 50 years? 50 years, by the way, for those of you who struggle with sums, takes you back to 1970. 1970, what is happening in the world? The world is going into a deeply uncertain phase. We've got an oil crisis, we've got global terrorism on the rise, we've got Watergate and Richard Nixon and deep political unhappiness in the United States. We've got the emergence of Margaret Thatcher in the United Kingdom. We've got Bell Pottinger was involved there, or Lord Bell was involved there with Margaret Thatcher saying Labour isn't working because the Labour government at the time was taking the economy down into a negative spiral. So the UK was broken, Europe was broken. It was a really, really tough time. South Africa, of course, we had the 1976 winter uprising. We had the beginnings of what became a low-key and then a very high-key civil war by the 1980s, where bombs were exploding in wimpy bars, and people were young white South Africans were being sent off to go and fight the Cubans in Angola, and we had lots of young black South Africans packing their bags, some young white South Africans as well, packing their bags and going for military training in Russia and other parts of Africa. It was shambolic, shambolic. So your votes on that one, please. And then let's finish that poll, and then follow it up immediately, if we can, with the second question, because the second question here is quite important. And that second question is, how many of those recessions have happened since 1994? That's an important question. So since 1994, have we had 2 recessions, 5 recessions, or 7 recessions? Hard to do with one hand. 2, 5, or 7. How many recessions have we had since that time? Bearing in mind that South Africa has been feeling in the doldrums forever. I mean, God, remember 2015? In 2015, and Nhlanhla gets fired. It's almost the anniversary, by the way. And they called it 11/12. Didn't they? Yes, they called it 11/12 or 9/12. They called it 9/12. It was 1 week away. So 1 week's time, the 9th of December 2015. It's only the other day where Jacob Zuma fires Nhlanhla. Bond market goes haywire. Currency goes to hell. Des van Rooyen is appointed as finance minister. Then Zuma's held over a barrel and forced to appoint Pravin Gordhan, who keeps spending money like it's made on a fancy money tree. Ooh, he blew the budget, that guy. And then, of course, we fired Pravin. I say we, the royal we fired Pravin Gordhan. We bring Malusi Gigaba in. I mean, he's better known as a home movie director as Malusi Gigaba. Those kind of movies, bad movies. And yeah, it's a mess. It's an absolute mess. Anyway, Robin's going to send me the poll results in just a moment. And so I can see just where your mindset is in terms of South Africa, because I think it's important that we talk about that. And then I go back to sharing my screen, I suspect. And hopefully I'm sort of back in the same place, or not. Because what we didn't practice beforehand was how we were going to get back to the original slide. There we go. Isn't that fancy? Because what this guy did, Hans Rosling, he wrote a book called Factfulness. And he challenged people around the world. He went and spoke to people around the world. He just asked very, very simple questions, much like the ones I've asked you. Whether global poverty was improving or getting worse, and he asked questions about health, and he asked questions about young women's education, and he came up with the conclusion that as human beings we do have an overdramatic worldview. We do think things are actually a hell of a lot worse than in fact they are. So we'll get back to that poll. Oh, Bronwyn sent me a message. That's excellent. And so I can now see the questions to the polling, which is lovely. And I am actually surprised. I'm really surprised. That's amazing. I'm delighted that you guys got it as wrong as you did. Well done. Thank you for playing the game so nicely. I asked you, how many recessions has South Africa had since 1994? And the questions were 9, 14, or 18. And just over half of you got it right, 54%. Some of you said 14, 33% of you said 14, and 13% said 18. So half of you got it horribly wrong. I then asked the question and followed it up with how many recessions has South Africa had since 1994? Bearing in mind that, technical term, a recession is a year of contraction. And 35% of you, so just over a third, can we call it a third? We'll call it a third, said 2. Half of you said we've had 5 recessions. And 16% of you, the Papa and Mama Bears, said we'd had 7. So it may surprise you to learn that, yes, we have had 9 recessions in the last 50 years, of which there have been just 2 in the last 20 odd years, since 1994. I can't do the maths, 26 years. We only had 2 recessions. One was absolutely not our fault. We were doing absolutely fine. We ran out of electricity and our HIV/AIDS policies were the worst in the world under Thabo Mbeki. The big thing where we made a mess economically was that we failed to invest in new power generation. In 2008, we ran out of electricity, which didn't help us. But the global financial crisis pushed us from growth rates of 5% and 6% in the first half of the first decade of the 21st century. We were doing really well, economic growth. It was a boom time. It was fabulous. And then the wheels came off in 2009. We contracted by about 2%. This year, as I said to you earlier, we're likely to come down by about 7.5%. And I think that this one is, as much as it's COVID inspired, the depth and the extent of the crisis that we're going to go through is our own fault, because we've been very much at the edge of a recession for an awfully long time. We were in very much a recessionary environment as we went into this crisis. And so therefore, so much of what we're dealing with now is self-inflicted, because we haven't taken the tough decisions on policy reforms. The government was supposed to appear in court today, taken by the unions, to try and sort out the mess of the government wage bill. And now they're saying, no. Why don't we just talk about it? Why don't we come back in January? Let's just we find it so hard to make tough economic decisions. But yeah, as human beings, we have an overdramatic worldview. I asked you how many recessions we'd had, and you did the bride talk version, because we feel constantly as if we're in a negative space. And so often we think that things are actually worse than they are. And that doesn't excuse how bad they are, not for a moment. I mean, our murder rate, for example, per 100,000 is outrageous. It's like 28 people per 100,000 murdered in South Africa every single year. But it's half the rate of what it was in 1994. Half the rate. Yes, it was elevated, of course, because of the Civil War in South Africa at the time, but the murder rate today is per 100,000 is lower. The infant mortality rate in South Africa is also about half of what it was in 1994, despite the fact that the public healthcare system in South Africa is such a mess, and you wouldn't want to queue there for a single moment. The stats suggest that often we make assumptions that are wrong. Now, how do you make a proper decision when you're making lousy assumptions? Because if you are advising clients on their money and your own mindset is one that is so negative, it's hard to help them make better decisions. So what I urge you to do is to arm yourself with facts. And my book helps, and it's available at all good bookstores now. You can go there and order one. We've got a new edition coming out in March next year as well, but go get it now. A story I don't tell in the book is this story. It's one of my favorites, about decision making. And sometimes decision making is not as easy as you would think it is. I'm sure everybody recognizes at least one, maybe 2 people in this photograph. Very few people know who the third guy is. I don't know if anybody's ever got up and asked the question. But Steve Jobs, he's holding up the keyboard. That's Steve Jobs, founder of Apple, with Steve Wozniak wearing a tie and a beard. He was the coder, manic coder. Steve Wozniak, I've chatted to him, lovely guy, super brainy, very nerdy. He's just tired of talking about the genius of Steve Jobs, when actually it was all his hard work that made the computers work. Steve was the salesman. The guy in the middle is Ronald Wayne. Ronald Wayne spent a short period of time at Apple in the early days. Apple had some investors. They were worried about Steve Jobs and Wozniak, who were in their mum's garage, or Jobs' mum's garage, spending investors' money hand over fist. They were giving credit lines to people who were notoriously bad payers, and they said to Ronald Wayne, look, you're slightly older, you've got to, you understand the world, you're a businessman, why don't you go and help these young guys? And he said, sure, I'll do it. I need a stake in the business. And so between them, they discussed, and they said, we'll give you 10%. Said, sure. Give me 10% of the business, and I'm in. They signed the articles of incorporation, and the story goes that within about 2 weeks, Ronald Wayne gave back his shares to Jobs and Wozniak and said, guys, have them back. I do not want these shares, because you're lunatics, both of you. You're fruitcakes. I can't work with you. And they said, okay, well, we'll give you $800. They said, thanks, I'll take the $800, rather than have the liability of Apple going bust and then the creditors coming after him, because he was the only one with assets, and he had kids at school and a mortgage and car payments to make. So he didn't want to take any risk. $800 he got for 10% of Apple. a $2 trillion company today. I asked the head boy of Hilton College the other day who won the maths prize. I said to him, what is 10% of 2 trillion? He got it right, $200 billion. And I said to him, did Ronald Wayne make the right decision? He goes, no way, he was nuts. What a terrible decision to have made. Ronald Wayne doesn't think so. This is him today. If I stayed with Apple, I would probably have wound up the richest man in the cemetery. Isn't it funny how so often we can make a decision that we regret, or a decision that seems right in the time but later seems wrong, but actually our decision making was solid at the beginning? And I think it goes to financial planning as much as anything else. These three guys started first round. Laurie Dippenard is my favorite quote on decision making. He goes, you know what, when you make decisions, you get the best people you can around the same table. You nut out the facts, and that's why the three of them managed to stay in business together for 40 years and build at its peak a 460 billion rand empire, financial services empire in South Africa, capitalizing, by the way, on the last big crisis we had in 1987 when there was a dead standstill and the world was going mad and Barclays disinvested. And they bought not only Southern Life, but Barclays as well, which created the base for their banking empire. Laurie Dippenard says, you argue the facts. You never argue the man. You never argue. You never make it personal. The person who brings the best facts to the table and argues them best wins the day. Then you make a decision based on those facts, and then you act on those facts, and then you put foot. It's what Ronald Wayne did. It's what these guys did. It's what made them successful. Had this crisis happened in the era of this telephone, how screwed would we be? Imagine in the era of the Nokia 3310 going home on lockdown. How much worse the world would have been. Or in the days of the dial-up modem, when most of us hopefully by now has some kind of broadband. Satya Nadella, this was in June, says we saw 2 years of digital transformation in just 2 months. You talk to people at takealot.com, they're operating on their 2026 business plan. So many South African companies have gone digital. They've gone global from the South African base. They've done incredibly well, thanks to the miracle of the internet. What else have we learned in this crisis? We've learned that science matters. Today, the United Kingdom has approved the Pfizer vaccine, and they're going to start rolling it out next week. It's a dramatic announcement. Lots of dramatic announcements coming. 3 global multinational drugs makers have announced they're ready to launch vaccines. Good for Aspen Pharmacare, which has done a deal with Johnson & Johnson, and that their vaccine gets approval. 300 million doses will be made in Port Elizabeth, and that will be for global export and hopefully for some use domestically as well. Yep, science matters. Technology matters. I mean, without technology, you and I wouldn't be chatting today. We wouldn't be having this conversation. Thank goodness for technology. Thank goodness that this crisis hit at this point in the 21st century where we could adapt. And let's never forget that leadership matters. I mean, had this crisis hit 5 years ago, not only would we not be on broadband, not only would the science not be as well evolved, but this guy would have been in charge. And I hate to think what a catastrophe we would be in. The mess in Russia, the mess in Brazil, the mess in America would look nothing to the catastrophe we would be facing in South Africa today. Never let a good crisis go to waste, and certainly it looks like from the outside that this is precisely what Cyril Ramaphosa is doing. I talk in the book. I got an email soon after I launched the book from the chairman of a company, and he said to me, on page 219, and I had to go back and have a look, was it page 217, you talk about the fact that South Africa needs a crisis. And I said, yes, but I didn't ever think it would be this crisis. I didn't think it would be so bad. And I said, bizarrely, a crisis might just be what South Africa needs to force the hand of policymakers to become more decisive. Crises that may accelerate a recovery following collapse, however, hurt the most vulnerable society, blah, blah, blah. We're seeing that play out right now. I didn't ever anticipate COVID. It wasn't my fault, I promise. But what we've seen nutted out at NEDLAC this year is not the best plan in the world, but it's the best plan we've seen in a long time because it incorporates the private sector in a way that's not been done before, because government has finally understood that when you run out of money, you need to start playing nice. You have to start accepting that profits matter, that you have to encourage profits and profitability because that's how taxes are paid, that's how jobs are created. And I think that we're getting there, and I'm hoping that 2021 starts off on that note. So you can be the glass half full person as an optimist, or the glass half empty pessimist type, or you can know that the glass is full of something revolting, but it's the glass that you've got. And within that environment, there are opportunity sets for you to exploit. Be more realistic. So before I leave you, I call it shit normally, but people get offended, so I won't say that. But bad stuff happens. Optimism is a choice. Optimism isn't accepting what is wrong. Optimism is saying, how can I change it and make it better? South Africa is always in a crisis. South Africa is always in some crisis or other. It's a complex and difficult place, but it's a good thing because when our backs are against the wall, frankly, we make better decisions and we act on those decisions better than when we become complacent and think somebody else will do the work. I think that's where we are. And in a world where there is just so much misinformation, if you spend time on social media or you spend time on Facebook or you get your news at the braai, please remember this one quote. If you remember nothing else from today, please remember this one thing. This one thing. The words of the great Abraham Lincoln. Don't believe everything you read on the internet. It will drive you nuts. And I know this quote to be true because Gustav Schulenberg, who I'm handing over to now, I found it on the internet.
Thanks a lot, Bruce. Yeah, it's so interesting. We, we get all these facts from different news sources, and yeah, it's the emotive ones, the negative ones, the perceived facts from Facebook are the ones we upweight. And at PSG Asset Management, to us, it's very, very important that we use all the facts. We look at all the facts, not only those that seem to hit home or worry us the most, and that's how we try to invest. Right now, we see a lot of extreme behavior in investment markets. We see a lot of extreme behavior, polarized societies, extreme positioning, high consensus on different outcomes, and that concerns us. What are the facts that make us conclude that the current environment is excessive and extreme? Global interest rates at 500-year lows, SA interest rates at 55-year lows. I mean, we look at business confidence in SA, we know how bad it is at the moment. That is also a fact. We look at what investors have put their money in. R500 billion has gone into local money market funds. The domestic equity holdings in the pension funds is at its lowest level since the 80s. We can see emerging markets as a whole has seen the largest outflows. This speaks to an environment where there's a high conviction in what the outcome of the future will be. Global tech is so popular. It's the most crowded trade in 20 years, and passive is seen as this low risk, bankable outperformer, which we think investors need to be careful of. If we look at the local environment, we see a lot of the same kind of narrative and the same behavior in terms of cash. Everything has to be a rand hedge. The investments in Naspers and Process are seen as very low risk. It's a foregone conclusion that they will continue to outperform. The message we would like to give clients and people acting on behalf of clients is make sure that clients are diversified in such a way that if the past doesn't repeat itself, then your clients will not be left with a proverbial bloody nose. Bruce made the comment earlier that it's incredible how quick things change. When we were all sitting here last Christmas, January, Donald Trump and them, I don't think anyone foresaw what 2020 would look like. So things can change quickly, and they can change in a way that we don't anticipate. Make sure that all clients and all investors, and we try to make sure that our clients are well hedged for a variety of outcomes, not one specific outcome. When we look at concentration, further facts, the top 5 stocks on the S&P now make up 23% of the index. This dwarfs the kind of 18% when we look at the dot-com bubble, when the biggest 5 stocks was 18% of the S&P. This tells you there is a very, very high conviction in those stocks. They are very crowded. They are there's a very big concentration in terms of the passive funds. It's a one-way bet, according to many investors, that these will continue to outperform, and therefore they are the largest in the index. We don't know. We don't try to take a view on these. We've owned some of these companies in the past. We think they are mostly very good companies. But typically, it's not a very good time to invest in companies when they become that popular and trade at the multiples that these companies do. And we would caution people buying into passives, especially the S&P 500 index. It's very interesting now in December, Tesla is going into this index. So all money allocated to S&P 500 passive funds and index trackers will be buying Tesla from now. Tesla's up more than 770% for the year and trades on a forward PE of north of 250 times. We don't know whether it's going to go up or down. We think it could be a great company. The point is to start allocating capital to it now. I really hope those investors don't get caught short when valuations start mattering or the Tesla share price takes a wobble. If you bring that back home, it's not too dissimilar. We look at this universe of stocks that we would argue is investable from a liquidity and size perspective, and we look at the 10 biggest stocks over the last 3 years have delivered 49%. And the average of the other roughly 140 stocks have delivered minus 29 on average. Now that's obviously an average. We've had outperformers and underperformers, but the point of it is that there is a very big consensual bet that the big companies will continue to outperform. That's where investors are finding favor, and there is a very pervasive narrative that the smaller companies will never outperform. And for us 3M investors, we are finding some great opportunities in that, in the other 140. These are not poor companies. They are run by very good management teams. They have very sound balance sheets, and they have the ability to grow their cash flows. Many of them, regardless of whether our economy recovers to a very robust level. So the point being that be careful of taking from Bruce's presentation. Be careful to assume that only some facts matter and only some stocks can continue to outperform, and the future will not look different from the past. We don't know, but the diversification of that is the key message in this. There are very good opportunities that are not currently seen as very popular and consensual bets. Then we get hit with the debt cliff, or the fiscal cliff, and the debt trap in South Africa. Now, this concerns us. The direction of travel is obviously not ideal, and we are equally concerned. We are not living in a different planet. What we decided to do is, once again, looking for the facts, is to dig into what the numbers show you. And on the left, we can see the cost cutting, and we just assume different levels of cost being cut according to the Minister of Finance. And what we did is, at the top, we used different real GDP growth rates over the next 5 years. And the interesting thing is we start right now at 82% debt to GDP. Should we not grow our economy, but we do all the cost cutting that Minister Mboweni has alluded to and is targeting, our debt will still increase to 131% of GDP. Conversely, if we cut nothing and none of these cost-cutting measures are successful in terms of the public wage bill, etc., but we grow the economy at 3% per year, which might sound foreign right now, but it is certainly not that far in terms of a stretch for a country like South Africa, then that has a much more meaningful impact on our debt to GDP. Obviously, the answer will be somewhere in the middle, and the kind of ideal outcome would be grow the economy and cut the costs. Government hasn't given us a lot of reason to put faith in their cost-cutting exercises, and I think there will be a few people who try to derail that process. But the point of the slide is we need to understand that growing the economy will have a much better impact, a much more meaningful impact on the country's debt and the potential of a debt trap, which we think is a risk, definitely, but it's not a foregone conclusion, as we see in many market commentators and many of our clients and many investors who believe it is a foregone conclusion. We believe it's a risk, and we need to look at the facts, and the facts are that different real GDP growth rates and different cost-cutting achievements will lead to different outcomes, but there's a variety of ways this can play out. So then we we bring it back to PSG Asset Management, and we often get questioned about the fact that we don't own these very big companies, these perceived very high quality companies that are kind of a shoe-in any portfolio. Then we've had a look at, once again, the facts, and we look at our portfolios. And what we've done is we've had a look at our top 15 holdings, and we had a look at the market. And if we look at it on a factual basis, and we look at the ROE over the long term of the companies that we own versus the return on equity produced by the companies on the market as a whole. And that, on a factual basis, to us indicates that the companies we own, our top 15 holdings, are actually better than the average company on the market. So it's not that we are sacrificing quality because we are not in these perceived high quality and very big companies. We are buying companies with good track records, good management teams, sound balance sheets, and that have a track record of returns in excess of the market. The irony to us is we're able to buy them much cheaper. We're paying 10% over book value, net asset value, whereas the market is trading at 2.6 times book. So when we look at these top 15 holdings, we are paying significantly less than a normal price for a company on the market. And we're getting a company that's got a track record of returns significantly better than a normal company. So we believe we can build diversified portfolios that can outperform in different scenarios. We don't try to forecast the future. We don't believe it's in our skill set. But what we do know is we can pick up these companies at very, very cheap valuations. And just because the fact that the market doesn't love them right now, and it's not the consensual crowded trade, doesn't mean that these are poor companies if we look at the facts. So just in conclusion, using one of our flagship funds in terms of the flexible fund, looking at how it is positioned, how it's structured right now, I come back to the first comment that people who allocate client capital need to make sure that we diversify well enough for a wide range of outcomes, not just a single outcome that yesterday and tomorrow look exactly the same. There's a couple of examples of companies we currently own on behalf of clients. We're very happy that the majority of those companies are above average. We're getting them on 50, sometimes 60 cents on the rand, and they have management teams and balance sheets that should withstand a variety of crises. If there's questions, I think Charles might have time for one or two questions. So let me hand over to Charles, and we go from there. Thank you for joining.
Thank you, Bruce. Thank you, Gustav. Bruce, maybe just in terms of one of the questions that we got was 2021. If you've got to predict what might actually happen from an economic perspective.
Are you mad? That's a terrible question. Right, so what's going to happen from an economic perspective? Consensus says we're going to get a 3.5% jump because things were so bad that the base is so low, you're going to get a recovery. Okay, so that's logical. It could be higher. And that's why I think Gustav's sort of hypothesis as to what happens when there is some growth coming through in the economy is so important. We have to get growth. It's actually a non-negotiable. And so much of it does depend on whether or not we start seeing the expenditure coming through in terms of the infrastructure spend. Already, just a couple of weeks ago, we've seen Afrimat, we've seen Raubex, we've seen Wilson Bailey Homes, we've seen a number of companies in the construction sector start talking about better flows coming through. I think Raubex got a 3 or 4 billion rand tender coming through from the South African National Roads Agency. Now, it's tiny, but it's better than we got in 2020 because so much fell off the radar. So there's a lot to fix. There's lots of money sitting on corporate balance sheets that can be invested in growth projects. There's a willingness to do so, but all that is required is a little bit of stability. And so much of that stability depends on confidence, and confidence comes from action. And so, Cyril, of course, can talk up as much as he likes cooperation and support and how much love there is in the public sector, the private sector. But really what we've got to start seeing is some policy actions. And so, the budget next year is going to be important. Tipoweni will deliver that budget. Fingers crossed. He seems to be enjoying his cooking of pilchards and chicken stews in Limpopo far too much for my liking. And there's not an overwhelming sense of support. There's still a mindset in government that we can print our way out of the crisis that we're in, and we can't. So I'm thinking that we could get to 3.5–4% next year. I'm thinking that it could be considerably better than 2020, simply because 2020 was so awful. It still means we're smaller by the end of next year than we were in 2019. But I do think, in as much as we overestimate the year's decline this year, we're underestimating the potential recovery next year. But it does all come down to confidence, and confidence is a really important thing to kick off 2021 on, and that's going to be hugely determined by whether or not we can contain the spread of this latest outbreak of COVID, and whether or not the plan that was nutted out at NEDLAC goes into practical application, because that's where we usually fail as South Africa, is taking great ideas, lots of good ideas, but boy, they take work. Errol Kruger was one time the registrar of banks, and at a time where banks used to do a lot of sort of joint ventures. And he says, it's all about samewerking. I don't like samewerking, said Errol Kruger. And I said, why not? He says, because everybody thinks also saam and jy werk. And so what we do need is a samewerking of a different kind, where we are all together in the same boat. The boat is leaking, but we're all working. We're all taking the boat in the same direction. So I'm optimistic, because that is my nature, that we get 3.5%, possibly more growth in 2021. And that changes, hopefully, the mindset of South Africans and gets us to be just a little bit more optimistic about the future.
Thank you, Bruce. I think we've hit 12 o'clock, so I'm rather going to call it an end. I
was just pausing and having fun. Jeez, like you guys.
All attendees will actually receive the email from PSG Asset Management within the next hour. We have applied for CPD points to be admitted for attending the webinar. Kindly complete the online assessment once you receive it. And then lastly, thanks a lot for attending today.